A new AM Best report suggests that the insurance-linked securities market will continue to grow in 2026, but perhaps at a slower rate than last year, with investors taking profits instead of redeploying capital in a softening market. We're joined today by two key members of AM Best ILS team, Senior Director Tang and Director Matt Tuite. And why we're going to start with you today. The report says that the ILS market reached $120 billion by the end of 2025. What trends are responsible for that growth, and are those trends expected to continue?
That's a good question, John. We can look at this from both the demand and supply sides to understand the growth. First, in 2025, both the supply and the demand for reinsurance capacity from the ILS market remained very strong. On the capital supply side, 3 consecutive years of strong ILS return generates significant retained earnings, much of which has been redeployed back into the market, in particular in the cat bond and sidecar market, which see most of the growth. On the demand side, we observe that a diverse and expanded group of citizens are turning to ILS market for capacity. And here's what we expect in the future, very near future though. First, the market will likely continue to grow, but at a slower pace than in 2025. Return most likely will be lower, but remain attractive enough for the investor to put money into it. However, some investor may choose to take profit rather than fully redeploy their retained earnings. On the demand side, citizens has become more comfortable with using the ILS capacity, especially the cat bond market. And so, routine cat bond issuance is likely to remain a lasting feature of the market.
Now, the report also notes that many catastrophe bonds upsized above initial targets and spreads compressed on average. What does that suggest about investor appetite for cat bonds?
Well, actually, this indicates that investor appetite for cat bonds has been very strong. Even spreads have been trending down since peaking in the first half of 2023. It reflects the large amount of capital flowing into the cat bond market from both retained earnings and new inflows. And the double-digit returns posted by the cat bond market have also drawn increased attention from the broader investor community.
Matt, were there any other trends in cat bond issuance in 2025?
Yeah, I mean, during the record-breaking year in 2025, there were a number of trends. One that was prominent again was the prevalence of new sponsors coming to the market for the first time and tapping the ILS market, specifically the cat bond market, for capacity. There were 13 new sponsors in 2025 in the 144A property cat bond market. And that's a similar number. I believe in the prior 2 years, there were around 11 each year in 2023 and 2024. So if you look over the past 3 years, it's over 30 new sponsors that have come and tapped the market. And so why is that significant or important or noteworthy? Well, I mean, it just goes back to what Y was saying in an earlier comment, that it's becoming more routine to issue cat bonds. It's being more routine to have them in your reinsurance tower, becoming more normalized. So that's one trend that's going on. And what does that illustrate further? Or what is the implication of these new sponsors coming? Well, when they come to the market, sometimes they're bringing U.S. wind risk, which is the predominant peril overall in the cat bond market, but sometimes they bring something new or something that there's generally less of in the market. So in the case of 2025, we had a few wildfire or cat bonds dedicated to wildfire that came to the market. So that gives investors who want to diversify a little bit away from U.S. wind another type of option, in this case wildfire. There was also an Israeli earthquake bond that came to market. So there are other earthquake bonds, but here it's targeting a specific location that maybe hadn't come to the cat bond market before. So overall, it makes the market more versatile, And it demonstrates for other sponsors who have other unique risks that they could come in and bring their risk to this market. And it's also deepens the market for investors because they have more options in which to invest.
So how did natural catastrophe losses impact the ILS market and the investor experience for that matter?
So I think the most significant thing in 2025 for the ILS market was the lack of a landfalling U.S. hurricane. So, when we're talking about cat bonds, they sit more remote in the reinsurance tower. They're meant to cover the really the big events, the ones that really would otherwise trouble a company or put a company in a more adverse position. So we didn't have one of those in 2025, and so that left the cat bond market coming out relatively unscathed, and returns came out in a robust way. But I'd also call out that in 2024 there were some significant hurricanes that made landfall in the United States, being Milton and Helene. But if you look at the returns in 2024, they were also super strong. So it's not just whether there's a landfalling U.S. hurricane or not, but it's like, does it hit in a location that's very dense with insured exposure? And what's the severity of that event? That matters a lot. But you can say, overall that 2025, the capital market weathered the LA wildfire very well, and all the other severe convective storms it weathered very well, largely because they sit in a higher portion of the reinsurance tower. And then just not having one of those really hard, damaging hurricanes to really slam the U.S., that also benefited the capital market, allowed to emerge unscathed relatively, and supported a high level of return yet again in 2025.
Thanks, Matt. Why?
Thanks very much, John.
That was AM Best ILS Team Senior Director Y. Tang and Director Matt Tuite. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.